Hi, and welcome to today's event where we have the pleasure to present Penneo and their half-year 2021 reporting. We have a full lineup. Nikolaj Højer, which is the former CEO and co-founder, will start it, and then we both have the new CEO, Christian Stendevad, and Kasper Christensen, CFO. The reasons for today is the half-year 2021 report. Impressive numbers, 30% net retention rate, 61% growth, third upgrade this year. So congrats, guys, with a very, very strong report. As always, questions, ask it in your right side. Just do it through the presentation. I will see if it fits in, or no worry, I will pick up if in the end, and we will get through all the questions. So just ask through the presentation, but if it doesn't fit in, I will wait with it. And Nikolaj, I think you should start from here.
Yeah, thanks. My name is Nikolaj. I'm one of the co-founders. And just to take any drama out of that, I was the interim CEO because our former CEO unfortunately had a severe disease in his family. He had to retire last year. I, as a co-founder, stepped in, and I'm now so happy that we have Christian, the new CEO, who has joined the company, you could say 9 months ago. Now, not 9 days ago. And that's basically also the reason why I'm still here. It's a little bit unfair to have him as you could say, as a hostage for numbers he didn't really participate in. So I'll do a main introduction. Then Christian will tell a little bit about himself, and we'll give the words over to Kasper, who will tell about the numbers. I guess some of you have been here before and know what Penneo is, but for the rest, I'll just give the 1-minute introduction to what we are. We are a software as a service company, fully focused on business to business. Many of you know us from digital signature if you have your annual report signed, but we also do a lot within document workflows and know your customer and AML regulation. We have more than 2,000 customers. We see Denmark, Norway, Sweden as our home markets. We have grown up also to be active in Finland, Belgium, and also a single customer in Germany. To tell a little bit about our position in the home market in Denmark, we can say that approximately 66% of all annual reports were signed with Penneo last year. There's a little bit of noise on my, maybe it's Penneo, maybe it's Kasper and Christian that should mute your phones or something like that.
I think that would be a good idea.
Yeah, are you muted, Kasper? There's a little bit of echo here.
Yeah.
Okay, I don't know. So let's live with that. Our goal is to take our position and run it out across Europe. We're 90 employees, approximately a little more than 20 nationalities, and we got listed at First North Copenhagen last year. So what have we spent the first half of 2021 on? Don't worry, Kasper will go through the figures. I'll here give the headlines. I think the first one is, of course, we increased our revenue, our software as a service revenue with 61%. We're extremely happy about that. And also we improved the guidance. I think now it's the third time we improved the guidance for this year. So we expect to end up between 56 and 60 million Danish kroner. We're also extremely happy that we got Christian as our new CEO. We hired Christian in March, and his former company were so happy about him that they wouldn't let him go until last week. Don't worry, Christian will talk more about himself. We also have strengthened our board of directors. I would like to highlight here that we have a new chairman, Christian Sagil, who have an impressive background, both as CEO, but also as a board member from large companies. And also we have hired Rikke Stampe-Skov as board member. She has a background both from one of the big accounting companies, but also she's currently a CEO of another listed software company. In other words, we're going through that process where we were old shareholder board to now a more professional independent board. So we're very happy with these new members. We also announced just before the summer vacation that we intend to migrate to the main market. As you know, we're at the small stock exchange, First North, and now we think we have the results and the size to prove that we are able to go to the real stock exchange. We will do that with a 2021 annual report in Q1. And as part of that, we have announced a new growth plan that I will come back to in one slide. What we did in Q4 last year were that we bought a Danish startup called CLA Reply, who had developed a Know Your Customer software. We had the intention, which we also announced at that point in time, to roll out this piece of software not only to our Danish customers and also abroad. And that's why we're so happy that we, during this half, announced the first major deal where KPMG Norway, which is one of our existing accounting companies for the signing part, now also bought the KYC solution. And finally, we got our first customer in Germany. We downplay that a little bit because we're based in the process of developing the German market, finding out what the solution should be. So that's why we're not really having that as a big splash. It's very important to say it's not like we are going really, really big in Germany right now. We're in the process of finalizing our product for the German market, and we do that together with our first customer. Finally, we announced before the summer break this intention to go to the Nasdaq main market, and also that we, as part of that, basically saw that we underinvest. I think when you see the figures which Kasper will communicate, you basically hopefully say, oh my God, this is really well done. And when we see the figure, we're both happy and not so happy, because you can say we actually think we underinvest, and that's why we want to grow faster, or at least keep the current growth rate. And that's why we identified some areas that we would really like to invest harder into. The first one is that, as you just saw, we've already sold the KYC software to some of the auditors, but we basically have plus 700 auditors in our customer database, which we would like to sell our KYC solution through. That's one area. In the past, we have narrowed our strategic vertical down to auditing and accounting, but now we see a strong pull from the financial sector in regards to both our products, both the signing and the KYC. We basically want to replicate what we have done in the auditing and do that in the financial sector. That is growth area number 2. And growth number 3 is that, we have this ambition to be the European de facto standard in these verticals. We would like to invest harder into that, meaning that go deeper into some of the countries we are already in, and maybe more longer term, also go into new countries. So in other words, we are very proud of what we have done in the first half, both on, you can say, the management and the management and the leadership side, also on the revenue, and also now with the new strategy going forward. And with these, sorry,
Nikolai, just to get a clarification, I don't know whether you went a little bit too fast over. There's a question here: do we also make a large capital increase when you go to the main market? So if you can just elaborate a little bit on that number.
Good point. We have announced that we, as no later than when we go to the main market, will raise up to approximately 100 million kroner. So you can say, is that large? I don't know. For a company like ours, we think it's large. But yes, we want to raise money to invest into these areas. It can be for the main market introduction or at the same point in time.
Perfect.
Cool. I'll give the words now to Christian. And you're muted, Penneo. So.
Thank you very much, Nikolai. As you can see here, this is now my day number 9 at Penneo, and I'm so happy to have joined this company. And when I look at the numbers, it's really great to see how good you have performed so far. And I'm very humble in this position to try to support the scale up. I will, for this presentation, talk a little bit about myself. I think that will be the first and the last time going forward. I will only talk about Penneo and the journey we are on. But as a background here, before I joined Penneo, I was co-heading the international scaling and growth of another business-to-business SaaS company called Omada. It is a Danish company. And I joined them 17 years ago, and when we were very small and a startup, invested in and then co-headed it, meaning that the founder, Morten Bo Sigurdsson, I basically joined him in the exec management team, and then together with him and then all the colleagues built it up. And it was a startup from from the very beginning until what it is today, 300 employees. And at the same time, as part of that growth journey, we started out in Denmark, had headquarters here close to Penneo in Copenhagen, and then we expanded into the Nordic countries first, and then into Germany, Austria, and Switzerland, and had a very strong footprint there, continue into Benelux, and grew that up, and then we continued into both other regions in Europe and into the US. So a very similar path as we have also can see now with Penneo, building up strong in Denmark, going into the Nordic, and already now have plans on going further ahead. And from an industry point of view, I have been used to sell and deliver to the regulated industries and enterprises with a very strong focus on security and compliance and governance. As Omada, what they were doing is identity governance and administration, so very much about the security, governance, and compliance of who has access to what. And now with the digital signature as an example, and customers, that's another type of identities we are looking at here, but it was a very similar agenda. And with that, I have been used to sell to, for example, the finance sector. So I know very well the finance sector in Germany, as well here in Denmark and the Nordics, and met a lot of them. As part of this growth journey, it also very much been focused on ramping up the whole organization to make a scalable, standardized, repeatable business. So really, when you have a startup, then you build the product and you sell to a visionary customer. But later on, when you want to scale up, it's really to build the whole organization, from marketing to sales to the product and innovation, support, finance, etc. So that has been a very important part of that business. And then the fifth point is we did a transition from a traditional license sale to a SaaS subscription business. And then as a part of that, accelerating the growth and international expansion with substantial investment, as Omada got investment first in 2015 from C5 in the UK, and then in 2018 Omada got CVC Growth Capital and Grow Capital as part of the investors into it that helped us on accelerating that growth. And when I then compare that, and basically why I chose Penneo, I would very much like to do this journey all again. And then with all the experience from a similar journey, then start an earlier stage and then do it. And then so happy that also Penneo found me, as Penneo have now been doing a similar and are really, really doing well. And then from now on, and continue on that basis to grow up. That is what it's all about. And then with that, I can use all my experience, and then together with the team and the foundation we have, really scale up Penneo. So that I'm extremely excited about. And especially now also when the more people I meet here in Penneo, the more excited I get. So I'm grateful that I have joined. So that was a little bit about me and why I did it. And then we can continue with the financial numbers.
Perfect. So when we are talking about being exciting, I've chosen to bring some of the usual slides to you guys, and I'll also added some new slides. So yeah, first of all, let's start out with the cohort analysis. We have chosen to divide all our cohorts into the year that the customers became customers. So the dark blue column in the bottom here is customers becoming customers in 2014. This is the ARR, and what you can see out of this slide is that we year over year since we started out has seen every cohort is growing. So we are proud that if one customer is leaving us, the rest of the customers is actually filling out this empty spaces and more to add on it. So yeah, that's the historical reason why we now announce that we are ready for taking a new jump, a new gear up since the IPO with a raise of 100 million. This is the period 1 year back, so 12 months back. Overall, we have growth our ARR by 61%, as Nikolai mentioned, we are proud of these numbers. It's cool to be there. If we divide it until our existing customers and to new customers, we see that the churn is, in our opinion, very low, 2%. As you can see, if you look back in the old quarters, we are about 2-3% every time we are reporting on the quarters 12 months back. So yeah, we are happy that we are succeeding keeping those low churn rates. And we are not taking it for granted. For us, it's a daily job to ensure that our customers are still happy and we are in front of the markets when it comes to auditors, especially auditors. What we have seen in the past quarter is that we succeed selling new clients, adding that to the uplift list. So we're not only upselling the old signing tool to our clients, which we also saw as a success. Now we have added this new product. So if you look at quarter back, you'll see numbers where we are not start selling this system. Now we are slowly starting selling a new product to our current customer base. So yeah, we are up from 25% last quarter to 32% this quarter. Yeah, we're pretty amazed about it, and humbled to see that actually succeed. And we're also pretty satisfied about the 32% uplift on AR based on new customers. It's the same growth rate as last quarter, but in Danish crown, it's a bigger number. So yeah, we are okay with the numbers. This time we have included new numbers in our report. Some investors are asking why I'm not disclosing your SaaS numbers since you're a SaaS company. And we have actually been proud of our numbers at the past year. So why not disclose it? But it has been a journey to take the next step since we become listed. So now we have included the SaaS numbers. So what we have seen since we became listed at the end of Q2 last year is that we succeed in growing the numbers of customers that we're actually getting in. What we have planned and what we have succeeded is that we're also getting bigger and bigger clients in on our platform. That's the outcome of our focus on the heavy regulated markets, for instance, auditors or finance. Our customer acquisition cost here is defined as the inbound lead spend and the cost to the staff cost directly related to the sales reps. What we see is it is approximately 20 to 22,000 Danish crowns to get one customer in. And afterwards, what you can see on the chart below this slide deck is that the first 5 years, our cohorts show that we grow historically 7.5% year on year. So started out with the AR on 18,000, 19,000, and then we expect the customers to grow from there. So compare that numbers with the 21 crown to get the customers onboarded. So we are satisfied about it, and that's also one of the reasons why we now think it's time for us to speed up the process, getting more clients in at the time, or customers in at the time. Another number, speaking of SaaS metrics, is our net AR retention rate. We are pretty proud that we're now on a 130% retaining AR rate, meaning that we are not only keeping track on our numbers, we are actually growing it. Yeah, and as the last number here, I'll just say that if you see all the customers in average, cut it out one point in time, Q3, 4, 1, 2 here, that we are having an average revenue per account who is growing. So that's also part of the strategy we disclosed during the IPO. When we come to the P&L here, we can see that we grow the top line. Of course, we're just talking about the top line here, but what satisfies me is that we are not only having a contribution margin on approx 80%, we are also increasing it a bit. Compared to other companies, I think we could be satisfied about this high gross margin. What we also see is that our other external expenses is growing when we look 12 months back. And that's one of the reasons for the IPO was also to invest into our entire value chain, see where can we actually optimize some process. and automate them. So one of the things we have done is to implement new ERP system, a new CRM system. On top of that, we have grown our staff cost. Of course, the main reason why we raised the money was to invest heavily into scaling the team, especially when it comes to product and sales development. By sales development, I mean marketing and sales reps. So combined with the previous slide, I think it's pretty cool to see that the CAC isn't increasing, even that we have increased the numbers of sales reps, meaning that they're actually ramping up faster than we expect back then. Yeah. So the result of H1 is that we came out in the top of our guidance, a bit above our guidance. And what we also could see is that we need to raise our guidance for the entire year. So now we guided that we will have a growth rate between 51 and 62. And of course, I hope we will come in the high end, but no promise from here. It's an expectations to be within this area. And of course, we're working for getting the high goal here. That's all for me, Michael. Michael, you're muted.
Yes, I know. I just needed the computer to react. Yeah, there's a question why you don't buy something into. There's a suggestion here. I'm not reading it up, but do you want to buy your way a little bit into the financial sector, like you bought this KYC AML tool? Is there thinking about buying your way in a little bit into the financial sector, or do you see your full product supply as you have now enough to go into the more financial institutions segment as you are planning?
Well, it's a very broad question, right? Could we in the future acquire some companies? Of course we could, but I think the strategy we have now is we basically see that our existing products satisfy the needs of a customer. So I think that's a fluffy answer, but yeah, that's basically what we already have financial industry customers on a platform, and especially after we added the KYC part, we see a strong pull from that sector. What we'll do in the future, who knows?
I think that's the normal answer, Nikolai. You don't need to excuse.
Elaborate a bit here, if it's okay, Michael.
Perfect.
I think it's important to understand that we have now disclosed that our journey is going into the finance sector, and that's one of the reasons why we raised 100 million. We have not disclosed that we have raised them 100 million yet, so we are pretty early stage in that journey. So first of all, we need to build a team focusing on the financial sectors, and that after that we'll investigate what is the opportunity, and then I'll just say like Nikolai, of course, maybe it could be.
Then there's a very direct question: will it be to existing shareholder? You meaning that the existing shareholder will get a chance or the 100 million, or will it be placed in the market the 100 million? I don't know how
we have not disclosed that yet, what we're going to do. What we have disclosed is that no later than at main market introduction are we planning to raise the money. Whether we do a direct offering or what we're doing, we haven't communicated that yet.
Perfect. Then there's a question here whether the stock market don't seem so impressed about the numbers. Do we have some initiatives to nurse the share price and within the legal frame? So I will leave that to you, Nikolai.
Well, basically, we've decided from the beginning that when our stock price go up or down, we don't really comment on that. We keep focusing on operational performance, and we let the figures speak for itself. We think right now that when you compare our performance with the 61% AR growth, which by the way is organic, that's very important, right? With the net retention rate and what we have done so far, we're extremely proud. And well, how I think that's also one of the things you see on First North is the ups and downs can go quickly, right? Because there's limited liquidity in the stock. So no, we don't have any plans for nursing that. I can of course say I'm a happy shareholder myself. So of course we all have an interest in that, but no, it's honestly it's not our focus. It's not what we spend our management time on. That is on ensuring that we can grow in the future.
So the way you want to nurse is keep delivering those strong numbers. Noted. Then there's what is your average contract length? Do we have longer contracts, 1 year, 1 month? So your contract lengths, and how often do the clients pay? Looking at the cash flow. I don't know whether you have disclosed that or you want to comment on it, Kasper.
I think we can comment on it. The main of how I say it, the majority. Yeah, of course, of our customers is signing up for 1 year. And they're also paying for the first year upfront. So yeah, that's the main part of our customers.
Perfect. Do you disclose your EBIT margin? There's some bookkeeping, I think, Kasper.
No.
There's a question here. Do we have some bottlenecks in your production for growing, or are you seeing it pretty free? So this is a general question. Do we have a bottleneck in getting customers in, or somewhere? It's a general question. I don't know who should comment on.
I think maybe we should separate, right? Because first of all, we are business to business, right? And that typically means that it's some kind of manual process you're delivering. So yes, it might be that you have a standalone software as we have, which you can basically plug in. But you can say the bottleneck is typically on the customer side who do some kind of implementation program, right? So when we sell to our software to an organization with 1,000 employees who are going to use Penneo, of course, there are some, you can say, bottlenecks on their side. But it's important to say that we're basically selling a plug-and-play solution. But are there still bottlenecks? Of course there are. And I think the main bottlenecks is, of course, that we're operating in Europe. And Europe is not one market. Europe is many markets with different maturity levels, with different kind of pieces of software you have to integrate to. So yes, there are bottlenecks there, and you can see that as a disadvantage. You can actually also see it as an advantage, right? Because that means that I guess we as a European company, we're used to that. We've already succeeded on that in a number of markets, and we can continue doing that. So for us, it's basically just the rules of the game. So to answer the question, no, in terms of our product, so if you are a company that wants to have access to a platform, you can basically get it right now. So there's no bottleneck there. But of course, as we grow to new industries or to new countries, we need to integrate with our API to new pieces of software.
Perfect. And then there's, I think, to Kasper, can you please further discuss the declining gross margin versus first half of 20? I'm not sure there is a declining gross margin, but let's get the numbers up. And the underlying mix effect from KYC or new macros, excluding the variable marketing spend.
Yeah, first of all, I think the gross margin has increased. So I think it's a the good way here. I'm not sure I'll dive into the details here, but yeah. To be honest, the delivery cost for instance, AML CLA represent it has a lower cost than the signing part. But I think it's too deep to dive into those kind of details.
Perfect. And I have a question then regarding this increasing upselling you're doing, the net retention rate, impressive 130. How much of that is driven by your KYC AML that you're rolling it out to your customers? So I can get a feeling, is it something you can continue with, or are you already far in the rolling out of this to your customers?
We're still in the early days. We basically acquired the company in Q4 last year. We announced the first major deal here in Q2, I think. It's early days. We haven't disclosed the mix and how many, but it's still early days, right? Because we basically acquired a startup that has to be integrated to us. We have to educate our team to go out and market that solution. What we've disclosed is that we see a strong pull for the market. We have disclosed the first major deal, but it's still in the early days.
It's not what is driving the upselling. It's still the normal one. And maybe a question, and I know this will be hard. How big a potential, is it all your clients? If you're looking at your big, large 2,000 client portfolio base, is it all that will be relevant for getting this rolled out? I know it's a little bit of a difficult question, but just in ballparks, is it a large part of your client base who could actually see a benefit from implementing this and your possibility to upsell it?
I'll answer a different way, right? We are focusing on regulated industries, especially those industries that are regulated by AML and KYC thing, right? We have announced we have more than 700 accounting companies. So if you add all accounting and law firms and finance, I would basically say that all of them need to have a KYC solution, because that's basic demand. So I guess, Michael, if you have a holding company, I'm very sure that once a year at least, you need to validate your identity to both your accountant and to your lawyer. Most of that is manual. If we dream 2-3 years ahead, will they have a piece of software to do that? I think so. Could we sell it to a big part of our customer base? Yes. So no, it's not everyone, but a very significant part of our customers need that kind of software.
And then I think it's a little bit, there's a question here, the ability to keep your retention rate at the same high level. I know you're not guiding, but your own feeling, you're just in the start of rolling this out. Is there something looking into the future that should not keep the retention rate so high? I know as a growing business, it gets harder and harder and harder, but besides the numbers, are you seeing anything that should keep you from reaching those high retention rates in the future? Or keeping at this level?
It's really hard to say. It would be a fluffy answer, right? But it's really, really hard to say. 130% is really extremely high. So far, we don't see any signs that it's changing, right? But what's driving that is increased use of our existing software, the signing. We think it will continue also in the future by this new KYC. And of course, we are not done innovating, right? We think that we can help our customers solve a lot of problems, either organic or products that we buy in. What will it be in 2-3 years from now? We have no clue, honestly, right? It's really hard. I think what we've shown over time that we have a very high net retention rate, and we don't see any signs so far that it should be significant differently. I don't know, Kasper, if you have some comments to that.
No, but I just want to elaborate a bit. As we just said, we have had this deal with KPMG Norway that we have disclosed this quarter, who is a part of the 32% uplift here. That's only the start of CLA, the AML tool selling into current customers. And what we see in the roadmap is that we are building a stronger solution, end-to-end solution for auditors, and there'll also be added some new features on that. And we are not guiding, so it's not an exact answer, but I'm confident about the growth rate from the coming period. I cannot guarantee that kind of high numbers continuing year.
It would always be a fluffy answer or not a fluffy answer when you don't guide on it. And Christian, I think maybe we listen a little bit too little to you, and I understand the reason, but something I always like to see when a CEO comes from the same journey and he now needs to replicate it. Was there some mistakes you did in your former company that you maybe now think you can avoid? So not small mistakes, but in the thinking, maybe to give an idea on what you want to avoid when you take this journey again with Penneo.
Yeah, I've been giving that a lot of thought of what will I do that went well and what maybe should avoid, because it is true that I have not only done successes but also I have my experience of things not to do. One of the things that I would have done personally different would be to invest much earlier, because when we make the transition to a SaaS, then we really did a heavy investment, And that was basically from 2018. And if I would have redone it, I would have already pressed the accelerator in 2015. So this thing about having high growth rate and have a focus on that, and then yes, it has some cost associated with it. It might have a negative EBITDA, yeah, but I would still have done it. So that's one of the things that I would have changed. But I can see here that Penneo has done that on a much earlier part of the journey. So that's
and with the capital raise, I think it feeds into your what you did.
And we could just. I had that experience because we could compare. We have our competition at that point in time. We had several competitors who was doing that earlier. So basically investing $1 to $2 million a month that had negative, and we were always profitable month after month. So that was what we were up against, and I think we should then simply have done it earlier to have on the same growth as they did. And that had nothing to do with the innovation because we became number one in what we did. The same here. A lot of innovation can be done, but you can simply do it faster if you invest. And that's what we are against. If you have all the metrics correct, and that's at least now I'm coming from outside. I know I'm now in charge. Going forward, I will do all the explanation that Nikolai is doing now, but simply coming from outside and see some of these metrics and comparing that up against, because we had access to 30 different SaaS company that we compared up against. These are amazing numbers, and if you have this, you invest. That's my experience. And
maybe to end up with a question from the audience, what is the biggest company-specific risk of Penneo? I know again it's broad. What keeps you up at night? I always say also is a good question. What is the worst? What is your worst nightmare keeping you up at night, if you should mention just one thing?
I think that we have seen a company being the kind of self-confident when they have succeeded. So yeah, when we're showing numbers like this, we could actually, lean back and say, oh, it's cool. But if you want to be a market leader in a specific vertical, you also need to be in front of your competitors. So yeah, I think that the risk could be that we'll turn down the investment into being innovative and so on in the product, just focusing on scale. I think it's important, also to invest into the future when it comes to a product.
And Nikolai, is that the same by you?
Yeah, I think that basically it's down to this, that we're in this phase where we've been a startup and now we're scale up. And scale up means, as Christian rightly said, that we have the right metrics. And that's of course important because then you could put gas or put the speeder down, but you still need to innovate, right? How do you make sure that you innovate at the same time and keep that energy that made Penneo what we are today? Because that was basically about doing stuff in innovative ways with no money. Now we have money, and that's great because that means we can do it faster, but we also need to innovate ourselves, right?
Perfect. I think that is a good way to round off. I also think we are way over time. But thank you, Christian, Kasper, and Nikolai for taking us through the presentation, and thank you for a lot of good questions.
Thank you.
Thank you very much.